All right, y'all. Welcome back. Welcome back. This part two. Um, we seen another CRT trade, and I want to go over that with you guys and show y'all what that looked like. So we are on gold, and let's go look and see what the charts gave us. Let me delete all these drawings. All right, so when we look at gold, what we can see is gold is in a strong uptrend, right? We got this strong uptrend with gold. So if you know anything about trends in the market, the trend is your friend. You want to stay with the trend, right? Stay with the trend until the end. So let's go into the trade setup that I looked at, and it is right here. So looking at this trade, we have this candle here, and all of this was happening during the London session. So we have this candle right here, then we have this sweep and this pull up. Now, remember in the last video where I said that you want to put a box around the first candle? This is the first candle. We have the sweep and the pull back into the range. We got a 50% marked for this candle, and we got the 100% at the top of the box. So once this candle right here, which starts at 1 o'clock, closes and comes back into the range, we look for an entry within our 2 o'clock candle right here. So, and how you find that entry, I'm going to show you again and show you what I was looking at. So let's go to the 1 minute chart. All right. So the candle we're looking for is 2 o'clock. What you want to do is at 2 o'clock. 1 second. Let me find 2 o'clock. At 2 o'clock is right here. Booyah. At 2 o'clock, what you want to do is you want to see the opening cost of the 2 o'clock candle, right? And I'll show that to you right here. This is the 2 o'clock candle. If you look up top right here, this will show you the opening price. Opening price 41861. We can get a horizontal ray. Booyah. The opening price is right there. All right, the orange line. So what you want to do from this point is you have your 2 o'clock candle. Then right here you have your 1 o'clock candle. We got the pull down and the pull back into the range. Everything's look bunched up, but this is how the lower time frame looks when you zoom into these higher time frame candles. So soon as 2 o'clock start, what we're looking for is price to go below the opening price to create a wick. That is the wick. And the longer price sits below this opening price, the more dangerous it is for the market, because what's going to happen is price going to give you an entry to get into a trade below this opening price. This is where you want to get into your trade at. Below this opening price, you will get a trade set up, and you just take that setup and you could either ride it to the 50% mark right here of that first candle range from the higher time frame, or you could take the full candle and take your profit and get out and trail it if you want. But let's look at what happened and what I saw. So orange line right here. Let me make this thicker so y'all can see it. Booyah. Anything below this, we are looking for a buy opportunity, right? If we get a buy model right here below this, this is where you want to get into your trade at. So soon as price starts, we got these lows created. We see that we sweep liquidity right here. Boom, boom. And instantly after that, we get these two fair value gaps. Boom. Now, if you're looking at this and you see this candle close and you see this fair value gap and you see this fair value gap, let me just put two boxes there so you guys can see what I'm seeing. Boom. Boom. If you see these two fair value gaps, what you would do is you will take your entry here, and you can either put your stop loss right here at this bottom wick right here, because we're below the opening price, so this wick should be secure if the trade is going to work. Or you can just close it up right there at the fair value gap. You could take it to 50%, which is right there. That gives you a 1-to-1. But if you take it for the whole candle, you get a 1 to 4.36. And as you see, we create this fair value gap. You got to know what you're looking for, because this happens quick. Keep in mind we're on the 1 minute time frame. So you get this close above price again, leaving these fair value gaps. You get the next candle, creates the doji. Then a third candle hits your fair value gap and takes off. Beautiful trade, easily executed. You just got to know what you're looking for. And prime example of why to not be greedy. Look at what happens after we take the full range of this candle. After taking the full range, price, 1 second, price dumps off. So if you was up here and you was trying to hold this trade and didn't trail your stop loss, you would have lost this trade. But this is why we take our money and we get out the market. So see y'all on the next video. I'm out. Stop recording.